Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm joined by Zacks strategist Jeremy Mullen, who's also the editor of the Commodity Innovators newsletter here at Zacks, to talk about commodities, but also Bitcoin. What is going on with Bitcoin and gold in particular? We're doing kind of a comparison this week because both seemingly are on the verge of or are breaking out, and they're kind of getting lumped together, I feel, by a lot of investors. Should you own them? How do you own them? We're going to take a look at investing in Bitcoin and gold through stocks. Yes, you can still do that. What's the plan there? How does it work? What companies should you be looking at? We're covering it all. So welcome, Jeremy.
Hey, Tracy. Thanks for having me.
Yeah, this is an interesting time, I feel, for Bitcoin. Let's start with Bitcoin. So Bitcoin, everyone who follows me on Twitter knows I'm not a fan. I don't own any, but that doesn't mean I don't know what's going on with it. And I have been noticing of late that there seems to be another stage of excitement about it, and that, you know, the 100,000 level that everyone has talked about with Bitcoin for 5 or 6 years now seemingly is in the background lurking around now. I'm getting a few more tweets directed at myself about Bitcoin. So that's how I always know that, you know, maybe the Bitcoin bulls are back out. But what does the Bitcoin chart look like right now? Why are they excited? Should they be?
Yeah, I mean, they should be, because we're sitting right underneath all-time highs and gold's at all-time highs. So there's something going on with these safe haven kind of plays, and the chart's looking pretty good. But let's talk about why people are flocking to these investments. I mean, the first thing and the reason I got into Bitcoin years ago and it was under 3,000 was decentralization and this whole currency debasement inflation hedge. And I think the decentralization part has been lost a bit because we have these ETFs, which we're going to talk about. There's all this other stuff, like most people hold it in Coinbase. They don't really hold it for themselves in a cold storage wallet. But basically, what people are really liking now about it is this government spending aspect, and I need to protect myself from the dollar losing value. So we're sitting here and it's working out. We're close to all-time highs. If you want to look at this chart, I got kind of two targets lining up, and these are just based off Fibonacci's levels. That if you guys, read my stuff, I talk about this a lot. The first one is simply from the October lows in 2023 to the highs we hit in early January, or in the spring. We pulled back to this halfway back level at the 50% retracement. And I have targets up here at 85,000. Now, if we can get over this 70,000 hump, you can see it just is sold every time under 70,000. They're buying it every time under 60,000. If we get over that 75,000 hump, we should hit this 85 spot. And looking at an even bigger target, and this is when I really started getting interested recently, the 2021 highs to the lows, we had this retracement here, the 61.8. And you can kind of see as we went up to the $50,000 level, we pulled back, but we cut right through that. And these targets are over 100,000. This is the target is the 161.8 extension. And I use this all the time to give me a target, a place to sell the stock, or in this case, the cryptocurrency. And usually when you hit these targets, you have a pullback. That's why you sell. So that's what I'm kind of looking at. And I can zoom in and kind of show you the moving averages. We kind of see this 200-day moving average, which is the red line. And for you guys just listening, this has kind of slowly gone up from 50,000 to 55,000 to 60,000 where it is now. As long as we stay over there, the bulls are going to have and control this, and they're going to push for those targets. Now, we have a lot of risk ahead with election, and who knows what goes on there. There's a lot of political leanings with Bitcoin. So that might be the catalyst that we need to go up or down. But so far, right now, the chart's looking pretty good.
Okay. That's what I'm seeing, even just in the sentiment, without even looking at the chart. So I guess those two are kind of, running in the same space, basically.
Yeah, let me add though, one of the biggest negatives about Bitcoin, and I've been trading this in and out of this, since 2017, is the volatility. For an investment itself, I've seen this multiple times where you lose 50 to 70%. So I would just caution people. I mean, for a trader like me, I'm using stops. So if it breaks that 200-day moving average, I'm usually out and just resetting. This could definitely, if things go wrong, come all the way back down to, let's say, 40,000 or that mark where we started where everybody piled in the ETFs just above 35,000. So just remember that this thing has a lot of volatility, and things go wrong, they go wrong fast.
Yeah, that's a good point. But let's talk about the stocks the stock you could use to invest in it. If you don't want to go into the Bitcoin ETFs, which have launched now, there is always MicroStrategy. It's still out there. It's still owning the Bitcoin, and that's made a big move now, hasn't it?
Yeah, and this wasn't a great Fibonacci setup, and I'm sorry I ignored this one. And I'll tell you about why I've kind of ignored MicroStrategy in a little bit here. But yeah, if you look at the 2024 lows to highs, we had this was as Bitcoin was kind of breaking out towards new highs. We pulled back right into these fib zones, right? Into the 200-day moving average, 200-day moving average again. And now we're just trending, holding the 21-day moving average the whole way up into these 240 is kind of the fib target I have. Now, who knows with this thing, if Bitcoin really wants to break out, this could definitely extend much higher. But one of the reasons I kind of ignored MicroStrategy is, yes, while they had the Bitcoins, give you an update on the recent, they have 252,000 Bitcoins. The value is about 10 billion, and average purchase price is 39,266. That's the last update that I saw. And before they got into Bitcoin, they had a software business, their artificial intelligence powered enterprise software, right? And the revenues for just that business, or their total revenues for Q2, were $111 million. Now we're talking about a $40 billion market cap for this company. So when you're talking about $10 billion worth of Bitcoin, they're really pricing in this huge premium for what MicroStrategy is going to be worth in the future. So it's an interesting company. It's definitely playing on that leverage upon Bitcoin, because what MicroStrategy has been doing is they've been offering equity to buy Bitcoin, and Saylor continues to do that every opportunity he gets.
Yeah, MicroStrategy, just so people know, does not even have a Zacks rank anymore, which indicates that we don't have any analysts covering it. I think the analysts have abandoned it because it's just Bitcoin. Like, what is there to analyze?
Yeah.
Nothing.
Right.
Yeah.
Yeah,
So
sure.
they're out of there. But year to date, the shares are up 212% year to date. So
yeah, great performance.
Yeah. Ticker there is M as in Mary, S as in Sam, T as in Tom, R as in Robert, MSTR, if you want to go check it out. But wait, there's even more exciting news about MicroStrategy, because an ETF has launched that is the double MicroStrategy. And that ticker is M as in Mary, S as in Sam, T as in Tom, U, MSTU. What does that look like?
Well, it's very young, so the chart is, it's not going to show you a lot here, but, so far so good, right? We're going up, and this is just a super leverage, because like I said, MicroStrategy is built upon leverage. MSTU is 2x that. So you have leverage upon leverage, and these things can work very well in the short term. If Bitcoin does break out, this thing could easily double, right? So there possibly is a trade here. I just want to caution people that this is a trading instrument, not an investment. So I would really like to encourage people, if they do get on this, make sure you have a hard stop, or at least a mental stop, to where if it gets to like 50, you're out. If you go to T-Rex's webpage for this, they will show you the net asset value of what it's worth. Keep an eye on that, because you don't want to pay a premium for what the actual value for the fund is, unless Bitcoin is really flying to highs. And you're also paying expense ratio on this. I think it's just over 1%. So, I can spin this two ways. There's a lot of negatives that if Bitcoin goes south, this will go down south very quickly. However, there could be a great trade here if we do see that breakout.
Yeah, it seems pretty risky, but I'm the value stock investor. So I look at stuff like this and I'm like, no. But it is out there for those who want to trade it, not own it long term.
Right.
Yeah. Okay. Should we move on to gold?
Yeah, we can do gold. Let's do gold.
Okay. What does the gold chart look like? As you mentioned, it is breaking out to new all-time highs. I think I heard as of October 21st, it had hit 43 new all-time highs in 2024.
Yeah, it's wild. It's up every day. Right when I wake up, I check. First thing I do is before I brush my teeth is I check my phone and I'm like, where's everything at? And gold's up every day. And it's just like, oh, shocking. Up again, up again, up again. It's pretty amazing the run, the substantial amount of buying that has been in this. We'll talk about the reasons. Let's look at the chart first. And this is going all the way back to when I started trading. Back in 2005, gold was 400. You just ignored it. But then as we hit the financial crisis, there was some substantial interest in gold, and we saw it hit all-time highs in the years after that. Saw that nice pullback into 2016, and then we have continued higher. So what I have drawn on this chart is some simple Fibonacci extensions from those 2011 highs to the 2015-16 lows, and we have filled the first one here at just under 2,500. And what I call these upper targets here, these are greedy man targets, 261.8 and 423.6 extensions. These are long-term macro extensions that can be considered, but I would caution people. This is very optimistic, and really a lot of things have to go wrong in the world for for gold to be flying high like that. So I'm not sure if it's something you necessarily want to root for. And talking about that, geopolitical fears have really brought some buying into gold. Really, the breakout came right on the Israeli, the terrorist attack, and the month after that. That's when we really saw something going on. Now, we already had Ukraine, and we got some other stuff going on, but geopolitical fears definitely helped. Additionally, the same thing we were talking about Bitcoin. It's the government spending issue. People want to protect themselves from that. What I find really interesting is central banks have been a huge buyer over the last year. They bought over 1,000 tons of gold by the end of the third quarter this year. That's up 28% from last year. So they're in here. And this is the highest pace since 1967, which is, before the gold standard, we were taking off that. So pretty interesting that central banks are coming in here so hot. I mean, it's part of the reason we've seen this leg higher.
Yeah, what does the 3,000 level look like? Because that's what I keep hearing on Twitter. They keep talking about, it's going to get there maybe even by the end of this year to 3,000.
So as we hit these highs, I'm a fib guy, so I look for retracements. So it's hard for me to see any kind of level up there other than the psychologically round number. So it's something people like to strive for. I wouldn't put any credence behind that being like a technical level that I'm seeing. If you're looking for a pullback here, I actually have a pretty good one. If you want to look at the chart from these lows, basically the 2024 lows, let's just say we put in a high today, okay? But basically, if you had a retracement down to this 200-day moving average, it would also correlate with a Fibonacci retracement. And then I have something closer to that 3,000 level. So I think it would be great to have a healthy pullback in this thing for whatever reason. Maybe the election is a catalyst where it's like, all right, it's time. We have clarity. Maybe it's time to sell. We get a retracement into the end of the year. And if you've been wanting to buy gold, you buy it into, next year. I've seen gold run before. We saw it in 2011. It goes straight up, and then it usually has a sharp move down. And that's possibly what could be setting up here.
Okay. If you want to buy the gold, just gold, you can buy the gold ETF, which is GLD. That's been around nearly 20 years now. So that's an easy way just to buy the gold. But if you're looking for some stocks, I feel like the gold miners here are in a pretty good situation as long as they can get the gold out of the ground. And you own one that's like a gold focused royalty and streaming company. So they're not actually a miner, but they're invested in gold. And you own that in the Commodity Innovators, and it's Franco-Nevada, which is F as in Frank, N as in Nancy, V as in Victor. And that's a Canadian company. Why don't, you talk a little bit about why someone would want to own like a royalty company or any of the miners right now?
Yeah, I think it's all about the cash flow that comes with these companies, right? So if you own gold or GLD, it's not going to pay you back anything. But if you own some of these miners, what you're going to get is the money that they're making, the cash flow that they're making from these high gold prices, that goes into your pocket through dividends. And that's something that makes these companies really attractive. Why do I like FNV? It's kind of more of a diversified play. We'll talk about silver in a little bit, but it's 70% gold, 11% silver, and I think platinum's around 5 or 6%. So it's got like kind of a more diverse aspect to it. And yeah, if you look at this chart, it is hitting 2024 highs. This thing could definitely start really trending aggressively higher, especially if that silver starts to go. And I just wanted to you mentioned all the miners. There is an ETF for people, GDX, which is also at the highs of the year. So that's pretty nice to see if you can collect a dividend. You don't have to pick one of them. You can get a basket of these miners and just collect that cash flow all together.
Yeah, that's a good point. GDX, is that the one you have up?
Yeah.
Yeah. G as in George, D as in David, X. There is a junior one, GDXJ. Yeah. But as John Blank is always saying, you don't have to be a genius. You can go for the big guys. And, those income might be a little more steady out of the big miners, if that's what you're looking for. Because a lot of them now do have shareholder plans in place now that gold has been on a run. And some of them are share repurchase program plus a dividend, like a base dividend. So that's a little bit easier to do for the bigger miners. So there's a lot of good ways you can play it through the ETFs or a royalty like Franco-Nevada. A couple that I like, Newmont, ticker NEM, N as in Nancy, E as in Edward, M as in Mary. I own it in the Value Investor, and I also own it in my own portfolio now because I do want to get those free cash flows. I look at what their all-in sustaining costs were for just the second quarter, because we don't have third quarter yet, and it was $1,200 an ounce. And gold is over 2,700 right now. They have $1 a share base dividend right now, which is yielding 1.7%, and a $1 billion share repurchase plan already in place. And we'll see what happens with that if gold stays anywhere near these levels for any length of time and they're able to get it out of the ground. That's always the key. You always do have to listen in on these conference calls to find out what's happening with the various mines. Where are they mining? Are they mining in the US and Canada and maybe Mexico? Are they in Australia? Are they in an area of the world where it might be, there might be geopolitical concerns like the Middle East? So you do have to look and see where the miners are. and make sure that, they're actually getting it out of the ground. But I like what that is looking at. And Newmont has had a nice run here, but it's still pretty cheap. Is that Newmont that you're just putting up there?
Yeah, I just brought up Newmont. I don't really have updated charting on this, but you can see that trend. Like it's just channeling up really nicely. They have earnings tomorrow night. So we'll learn a lot about the miners. I know last quarter, Barrick Gold, their total cash per ounce is expected to be 3 to 5% higher. So one of the reasons these took so long to get going was that their cost to get that gold out of the ground and just operations in general were significantly higher than they have been in previous years. So gold really had to clear 2,000 before these really got going, and the market had faith in these miners. So if we do get that pullback, I would just caution, you really want to give these some time to come in if we do get that pullback in gold. However, if you want exposure, I'm not going to fault you for getting it here and getting that cash flow come, because with gold up anywhere over 2,500, all these things look attractive.
Right. Yeah. And I do think the miners are much like the energy producers. When the price of gold goes up, so does the stock, because they are unhedged and it is correlated basically. And the reverse will be true too. When the price of gold sells off, so will the miner stocks. So keep those in mind. Another one that's kind of interest is one of the large miners that I've taken a look at is Eldorado Gold, ticker EGO. And they're in Turkey, Greece, and Canada. Their all-in sustaining costs are $11.90 to $12.90, so very similar to Newmont. And it is a similar story, but they've had some issues at a mine in Greece, getting it up and running and where it needs to go. But now they're doing that, and they expect their gold production to increase 45% from 2023 to 2027. So we're kind of in the middle of that. And so if the price of gold is going up when you're increasing your gold production, good things happen to your earnings. So some people might want to check out Eldorado. They also said that they're going to start copper production by 2025. That's another thing with a lot of these bigger miners. They usually are in some other metals, either copper or silver, which you mentioned earlier. And I've seen a lot of chatter about silver, Jeremy, that people are expecting it to finally kind of catch up to gold and see some kind of breakout here. Is that what the chart is looking like for silver?
Yeah, I mean, it kind of has, right? So we're finally breaking out here and hitting. I had these targets set up. Let me zoom in just right on this. So from these lows to highs, it really pulled into that Fibonacci buy zone again. And that was they kind of front ran the 200-day moving average, and that has not been tested since. You can just see these lower highs as we went up, and we finally have just broken out to 35. So big accomplishment for the silver bulls here. I wanted to show this long-term chart because this goes all the way back to 1990 here. And I remember trading this in 2010 and 11. It was insane. The instrument I used was AGQ, which is still around. That's a 2X silver ETF. So if you want to trade this on like a short-term basis, AGQ is your play. The silver ETF SLV is just the standard ETF. Both those things were going nuts back in 2010, 11. And we're starting to see this kind of same move develop. Now, does it have the gas to get way up here to these targets? I mean, that would be wild. And the only reason I would see this panning out is if some kind of like supply demand issue within silver. So there's a lot of industrial uses that fuel the price of silver. We got electrical contact conductors, switches, solar panels, even mirrors and batteries and jewelry, stuff like that, right? So there has to be some kind of supply shock, I think, to get it going like this. But this trend and this chart look pretty good. I could see some stalling out here in the 35, 36. Perhaps we're set up to pull back into the election. But so far, so good. So with those ETFs I mentioned, some of the other companies, I think a good one is Pan American Silver, which is PAAS, and First Majestic AG. Those are, and then of course FNV, which is a smaller exposure to silver, but you still get some there. Those are 3 great stocks if you're interested in getting exposure to that potential silver move.
Yeah, I used to own Pan American Silver back in the day. I don't remember when it was. It was in the early 2000s at some point when silver was running. But then obviously I got out of that. So I'm surprised it's still around. It hasn't been taken over by anyone. That's another thing that I feel is happening out there. We are seeing some consolidation in the industry. When I went to go look at the gold miners again recently, I was surprised. Oh, that one no longer exists. It was bought by somebody. So I had to get a new list of miners that are still out there. But you mentioned the double silver, the AGQ, and that's up 86% year to date so far.
Yeah. So AGQ. So here, look at this chart here. Back in 2011, you can see this was some wild stuff back there. Tried day trading that back in the day. Now I was much younger here. I was, in my 20s, so I could handle that. Not anymore. But yeah, if you zoom out into this, you can see it's making multi-year highs here. Probably run into some resistance up in this area, but looking pretty good. I would just caution people with the MSTRU is a leverage product, so these drawdowns are pretty violent and they can be scary for people who are not used to that kind of stuff. So just take caution with that. If you want silver exposure, perhaps SLV is the way you want to go, or one of these miners that pay a dividend.
Yeah, that's good. Good thing to point out. All right. Anything else you want to add before we wrap up on Bitcoin versus gold?
No, I mean, Paul Tudor Jones was on CNBC this morning and says he owns both. I respect this guy a lot. I get the reasoning behind it. I would just caution that when these moves fail, they really reverse quickly. So to chase it at these levels for both gold and Bitcoin, and that's something I really want to do. And if I do end up jumping in and chasing it, I'm going to really have tight stops. It's not going to be an investment for me up here in any of these, gold, silver, or Bitcoin. But I'm always looking to buy any of these retracements, any of these dips for a longer term opportunity.
Okay. Let's recap the tickers we did talk about because there were quite a few. So on the Bitcoin side, you can buy MicroStrategy, which is a Bitcoin play, ticker M as in Mary, S, T, R as in Robert. The 2-time ETF, which just launched only a couple of weeks ago, is M as in Mary, S as in Sam, T as in Tom, U at the end, MSTU. Then we talked about Franco-Nevada, one of the gold royalty streaming companies, F as in Frank, N as in Nancy, V as in Victor, FNV. And then there was Newmont, ticker N as in Nancy, E as in Edward, M as in Mary. El Dorado Gold, E as in Edward, G as in George, O, EGO. We talked about the gold miner ETF, GDX is the ticker. The silver ETF is SLV. The gold ETF, if you want to own the physical, is GLD. And then the 2-time silver is A as in Adam, G as in George, Q, AGQ. And we also mentioned Pan American Silver, one of the silver miners. There's not as many of those, so they are a little more rare. P as in Paul, A as in Adam, A as in Adam, S as in Sam. PAAS is the ticker there. So lots of ideas if you want to be in a stock or an ETF and not actually go out and buy, some gold bars or coins or the actual Bitcoin. So lots of ways to play both of these. And, we'll be covering it over the next 6 months and to a year to see where things shake out on both of these. Will they get to their levels? 3,000 on gold is the level for gold. And then 100,000 on Bitcoin. We're still waiting to see that level. But as always, be sure to subscribe so you get all of our podcasts. You can get this video podcast on YouTube. Go to Zacks.com/YouTube or just put in Zacks Investment Research to get all of our videos and subscribe there. Otherwise, you can get the audio podcasts on Apple. We're on Spotify. We're on Amazon Music, SoundCloud, just about anywhere you can get the podcast. You can find us. And I know many of you do. So be sure to subscribe somewhere. And I'll see you again next week with some more stocks.